Good day, and welcome to High-Tech Pipes Limited Q3 FY2024 results conference call hosted by Antique Stock Broking Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Pallav Agarwal from Antique Stock Broking Limited. Thank you, and over to you, sir.
Yeah, thank you, Neerav, and good afternoon, everyone, and a warm welcome to the third quarter results call of High-Tech Pipes Limited. We have the senior management of the company represented by Mr. Anish Bansal, the whole-time director, and Mr. Arvind Bansal, Executive Director and CFO, with us on the call today. So I would now like to hand over the call to Mr. Anish Bansal for his opening remarks. Over to you, sir.
Good afternoon and welcome everyone in our Q3 ended 31st December 2023 earnings conference call. I am joined on the call by Mr. Arvind Kumar Bansal, ED and Group CFO, Mr. Arun Sharma, Company Secretary of the company. I hope everyone has had a chance to go through our results and investor presentation uploaded on the exchange. Now, let me take you through our financial highlights and the vision of the company going forward. As we are all aware that the Government of India has taken the vision of Viksit Bharat on the 100th anniversary of its independence. This is a very ambitious vision and it opens up a lot of opportunities for every industry, particularly infrastructure and construction sector. The National Infrastructure Pipeline for FY25 is a first of its kind. Whole of government's exercise to provide world-class infrastructure to citizens and improving their quality of life. Under this policy, an investment of rupees 1.1 lakh crores is expected for the development of world-class infrastructure in near future. Steel consumption is also expected to increase from current 120 million tons to 250 million tons by 2030. And the same goes for tubes and pipe sector as well. Your company also took this challenge as an opportunity and it is certain to achieve the vision of 1 million tons installed capacity by 2025. The focus of the company to increase proportion of its value-added products is also yielding positive results, and it has increased from 26% in FY23 to 31% in Q3 FY24 and 29% in 9 months FY24. We have the vision to increase this share to more than 50% by FY26. During the quarter, the company has supplied its material to many upcoming prestigious projects of the country, including Sardar Vallabhbhai Olympic Sports Enclave at Ahmedabad, Surat Diamond boasts the world's largest building at Surat, high-speed rail corridor for Mumbai-Ahmedabad bullet train project, and Jal Jeevan mission across several states in India. Sanand Unit 2, Phase 1 project of the company is also in the final stages of commissioning and trial production. This project is equipped for manufacturing high-end pipes for solar tractors and has got approval from various solar tractor manufacturers of the world. Phase 2 will be focused towards the oil and gas sector with highly specialized surface coatings. Now, coming to the quarterly performance. The turnover of the company has increased from rupees 569 crores in Q3 FY23 to rupees 630 crores in Q3 FY24, an increase of more than 10%. Sales volume has also increased from 91,232 tons to 98,473 tons, an increase of 8%. This has been achieved in spite of global challenges of steel prices decline. The EBITDA of the company has increased from rupees 28 crores in Q3 FY23 to rupees 31.57 crores in Q3 FY24, an increase of more than 12%. Profit after tax of the company has increased from rupees 13.02 crores in Q3 FY23 to rupees 14.33 crores in Q3 FY24, an increase of more than 10%. During the 9 months, the turnover of the company has increased from rupees 1,683 crores in Q3 FY23 to rupees 2,018 crores in Q3 FY24, increase of 20%. Similarly, sales volume has also increased from 2.48 lakh tons to 2.83 lakh tons, an increase of 14%. This again has been achieved in spite of global challenges of declining steel prices. The EBITDA of the company has increased from rupees 61 crores in Q3 FY23 to almost 80 crores in Q3 FY24, an increase of more than 17%. The PAT of the company has increased from 21.84 crores in Q3 FY23 to rupees 32.81 crores in Q3 FY24, an increase of more than 50%. The outlook for the coming quarter, with the steel prices stabilizing and restocking by dealers and distributors expected from this month, along with the rich basket of steel products and the new facilities at Sanand Unit 2, we are very confident that all these positive factors will pave the way for achieving the best ever quarterly performance for the upcoming quarter. Now we may discuss over questions and answers.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, you will wait for a moment while the question queue assembles. Participants, you may press star and 1 to ask a question. Participants, you may press star and 1 to ask the question. A reminder to all the participants, you may press star and 1 to ask the question. The first question is from the line of Ritvik Seth from One Up Financial Consultants. Please go ahead.
Hi, good evening, sir.
Yeah, good evening, Ritvik.
Yeah, hi. Sir, a few questions from my end. Firstly, in the press release, you have mentioned that by FY26, you target to reach 50% value-added products of the total volume, which is right now close to 30% on our volume run rate of about 1 lakh ton per quarter. So when FY26, probably we will be doing much higher volumes from current levels because of the new capacity coming up. So can you highlight and give us a rough what is the incremental volume application and which sectors, what is the product portfolio going from this 30% on current capacity and then 50% on the higher capacity?
Yeah, Ritvik. So here, all the upcoming capacity in Sanand and, wherever we will be putting up the fresh capacity, this is all focused towards value-added products. So there'll be galvanized, there'll be different kind of coatings on this. There'll be different SKUs, such as, like solar trackers, the solar torque tube that we have launched recently. We have got a very good response for this. And similarly, the galvanized pipes for Jal Jeevan Mission. So all these new capacities and, of course, oil and gas also in future. So all these fresh capacities that are coming up are focused only towards value-added products.
Okay. So basically, when we go from 5,80,000 towards 10 lakh tons, this 4,20,000 will be majority, more than 75-80% will be the capacity will itself be towards value-added products, right?
Absolutely. And also the roofing business that the company ventured very recently. This is also again a value-added product, the color-coated roofing sheet.
Right. Okay. And so you mentioned solar top tubes. That I believe is coming from Sanand, the current which is getting built. So when can we expect commercial sales from the solar for that application?
From this quarter itself.
Okay, from Q4 itself. Okay.
Yes.
Sure. Okay. And so this, what can you give a color on the EBITDA per ton for these value-added versus our blended EBITDA per ton of about 3,200 currently? Would it be meaningfully higher, closer to 5?
So Ritik, the EBITDA per ton for the value-added products ranges from 4,000 to 5,000 rupees per ton.
Okay, got it.
On a 12-month average basis.
Sure. Okay, sure. And so second question is on the working capital. We are in the range of 45 to 48 days currently. Is there any scope of reduction from current levels from 45 to 48 days? What are we targeting over the next 2 to 3 years once we get in the higher capacity? If you can throw some light on that, it will be helpful.
So Ritik, as you would notice, last 2 to 3 years, we have bring down this net working capital days from, like 70, 75 days to now 45 days. And I'm sure, with the new capacities and new SKUs and, and more of our marketing penetration, so this should come down.
Okay. And
it is, we are focused on this, and we want to, have the best possible efficiencies in terms of working capital. So we'll try to bring it down. So our internal target is to bring it to 30 to 35 days. So let's see, how and when it happens.
Sure. And so for this, you jump in capacity from in the next 15 months. Are we looking to add any distributors, dealers from the current base? How is it right now, and how we target to take it over the next 2 years?
Ritik, I think there will be an increase of about 20-25% in terms of our dealers and distributors over the next 15 months.
Okay.
And, we are engaging a lot with our, distribution channel partners on a very active basis. And we'll be expanding this once our, Sanand, this Unit 2 comes up.
Right. And what is the current base, sir?
So currently we are at around 400 dealers and distributors.
Okay, sure. And so one last question from my end. What will be the capex for FY25?
FY25 capex will be around 100 crores. It's a ballpark figure. It may vary by 10-15%.
Okay, and this will be to reach from 750,000 to 10 lakh tons, right?
Yes.
Okay, and this will be coming in brownfield existing.
Yes, that is correct.
Okay, sure, sir. This is helpful. Thank you, and all the best.
You're welcome, Ritik.
Thank you. Participants, you may press star and 1 to ask the question. The next question is from the line of Vikas Singh from Phillip Capital. Please go ahead.
Good evening, sir.
Yeah, good evening, Vikas.
Sir, I just wanted to understand, since most of the capacities is now commissioned, what kind of volume growth we are invoicing in FY25 and then FY26?
Sir, I'm expecting, at least a 20-25% jump in the net sales volume. Our Q3, this capacity of 1.5 lakh tons, this will be on stream in this quarter itself. So basically, we'll have a room of expanding our sales volume by 80 to 1 lakh tons, 80,000 to 1 lakh tons for the upcoming year.
Okay. And by when we are expecting 1 million ton capacity to commission, and the volume growth for that?
So by end of FY25.
Okay, so FY26 again another 1 to 1,25,000 tons kind
yes.
of.
Yes, sir.
Understood, sir. Sir, we have already seen some improvement in our EBITDA per ton. So by FY25, our volume value-added sales mix plus the targeted EBITDA per ton, if you could give us that number, it would be really helpful.
Because it will be on the upward trajectory for sure.
Targeted obviously.
So our internal target is it matches your expectations. But I just want to keep fingers crossed. There is a election year also, so there will be 1 or 2 months maybe the markets may not be as good as we expected. But definitely the one thing I can assure you that the EBITDA per ton will be rising because of the initiatives that we have taken in last 2 to 3 years. So all the markets, geographies, SKUs, our product verticals, everything is aligned for a much higher EBITDA per ton.
Understood. And sir, second question in terms of value addition. So in terms of capacity of 1 million ton by FY25, what will be the value added capacity in a mix?
Sir, almost you can say the value added capacity will be around 60%.
Understood. So that would also help in our EBITDA per ton. So just one last question. Some of our competitors had a very aggressive plan basically. So just wanted to understand, are we in a drawing board to announce further capacity expansion beyond 1 million ton, because that is kind of the visibility is already there, and by when we can expect something from you?
So because we are not going to stop at 1 million tons, but we want to go step by step. So 1 million ton itself is almost like a doubling of the production volume. So we'll be going step by step, and we have done like lot of our homework for the further capacity expansion, and it will happen in due course. But we want to go one by one.
Understood, sir. Thank you for answering my question, and all the best for the future.
You're welcome.
Thank you. Next question is from the line of Adhay Desai from Nivesha Investments. Please go ahead.
Good evening, sir. I just had this question that we are focused a lot on the infrastructure and construction sectors. So, considering that this is an election year, do we expect any lag of a quarter or two in our demand, or how do we expect demand growth in FY25 as a whole?
So basically, currently, as I can see, we are having a decent order book for infrastructure and construction sector. So that will, that will be pulled off till March end comfortably. And, within these next 2 to 3 months, I'm sure, our marketing team can accumulate enough orders that will sail us through Q1.
So, can you just guide me on the order book in terms of volume?
This volume currently that we are having the order book is, is suffice for March numbers. It is in, I cannot give you the exact number, but it is in excess of 25,000 tons.
Okay, correct. And also I wanted to understand how is the revenue per ton and EBITDA per ton for the color-coated sheets or color-coated coils?
So EBITDA per ton for color-coated coils is in excess of 4,000 rupees per ton.
Okay. And what is the revenue per ton, like considering there are stable steel prices?
So typical will be around 75,000 rupees per ton for color-coated.
Okay. Thanks a lot, sir. That was really helpful.
Thank you. A request to all the participants, please restrict to 2 questions per participant. If time permit, please come back in the question queue for a follow-up question. The next question is from the line of Akash Singhania from Art Ventures. Please go ahead.
Hello.
Yes, Akash, go ahead. Akash, may I request you to unmute your line and go ahead with your question, please?
Yeah. Hi, Anish. I have 2 questions. First is on the capacity. As you mentioned, we'll have around 1 million ton of capacity by next year FY25 end. Then let's say post the commissioning of this capacity in FY26, what is the tentative utilization we can have, and what could be the peak utilization or volumes we can have from 1 million ton capacity?
So, sir, peak utilization across our sector is around 70%.
Yes.
And by FY26, I think, we shall have all this capacity, up and running. But even then, I would say, like 60% is a very, safe assumption because of this election year also. But for FY26, I think we'll have good amount of volumes in our hand.
Okay. And my second question was on a recent interview in ET Now around 9-10 days back, which you had given, and you have given a target EBITDA for FY26. Actually, it was a bit unclear to me. Was it 250 crores or 450? So can you just reiterate that, the target which you have put for our company for FY26?
That is 250 crores.
250.
FY26, yeah.
Yeah, but just, okay, so just to break down this 250 crores, what, as per my maths, even if we do 6 lakh tons into 3,000, EBITDA per ton, it goes to 180. So where would my calculation or math go wrong? If you could just guide.
FY26, we are targeting a EBITDA per ton, like higher EBITDA per ton. Currently, we are at 3,100 rupees, 3,000 to 3,100 rupees.
So 3,500 per ton is, I think, would be a reasonable assumption.
For FY25 is 3,500, and for FY26 we are targeting 4,000 rupees per ton, because by that time we'll have all the oil and gas and expanded capacity of color-coated roofing also, and expanded capacity of the galvanized tubes and pipes also.
Okay, so this value-added products out of 1 million ton, what would be the total capacity for value-added products?
Almost 6 lakh tons. Almost 6 lakh tons.
6 lakh tons will be the total. Okay.
Yes.
Okay. Thank you for answering my questions and wish you all the best.
Hope it's clear now.
Yeah, it's very clear. Thank you so much.
Okay, sir.
Thank you. Next question is from the line of Ronald from Sharekhan. Please go ahead.
Yeah, good afternoon, sir.
Ronald, sorry to interrupt you. Can you please speak through the handset?
Is it okay now?
Yes.
Yeah, good evening, sir.
Yeah. So congratulations on good set of numbers. Now for FY24, we had set a target of 4.25 to 4.5. So are we on track, or there will be a little bit, lower sales volume in Q4, because generally Q4 is a very strong, but few months have also seen, lower demand. So in terms of that, and you also said that around 4,000 EBITDA per ton we can achieve by Q4. So we should be around 32, 3,500, or we should go for 4,000 EBITDA per ton from Q4 itself?
So, Ronald, so basically, this year, so far, we have done a sales volume of about 285,000 tons.
Right.
And, we are very confident of achieving 4 lakh ton plus volume for this financial year.
Okay.
And EBITDA per ton, we are just waiting for the steel prices to bottom out. I think this should happen by end of this month, or maximum by next month. So once this settles down, our EBITDA per ton will start rising, because there'll be no any inventory loss occurred because of the softening prices.
Okay. And this 3,200, does it have inventory loss also, or this is the normalized, we can say, EBITDA per ton?
Yes, it has a little bit.
Okay, it has little. So your normalized is still higher than 3,000?
Yeah. Yes, sir. Yeah.
Okay, great. And on this, for FY25, you had around 5 lakh ton plus target. So that stays, right?
Yeah, absolutely. Yeah.
Okay. And if you can lastly, guide upon that UP government, you had some land parcels and due diligence was going on. So still, this is the status quo, or there is some new development on that?
Yes, sir. Hopefully, there is positive development there, and hopefully, once we get the final intimation from the government, we will soon be announcing. But that project is on, and we are very, very optimistic and keen on that project. So it is on track, and hopefully, we should have good news very soon.
And that is over and above 1 million, right?
No, that'll be part of this 1 million ton.
Okay. Thank you very much, sir, and best of luck, sir.
Thank you. Participants, you may press star and 1 to ask a question. Next question is from the line of Adesh Mehta from Motilal Oswal. Please go ahead.
Hi, Anish. Am I audible?
Yeah, good evening, Adesh bhai.
Good evening, Anish ji. I just wanted to understand this 3,200 EBITDA per ton. How much of inventory loss would be there for this quarter, sir?
So there will be about 200 to 300 rupees per ton on a full 3-month average.
Full quarter. Okay. So basically, adjusting for that,
we anticipated, that this will happen, and we procured fixed price orders in the month of September and October.
Right.
So
right.
that helped us in insulating ourselves from this price decrease.
Right. So basically, if there was no inventory loss, our EBITDA per ton would have been 34 or 3,500.
Yes, sir.
Right?
Yes, sir.
And what is the run rate for December, sir, if you have that handy?
Run rate like volume?
Not volume, the EBITDA per ton run rate.
It was in this same range.
At around 3,500-3,600.
But then the inventory deduction is calculated for 3 months, so it is difficult to quantify the monthly thing.
I agree. Okay, sir. This is good. Thanks a lot. Wish you all the best, sir.
You're welcome, sir.
Thank you. Next question is from the line of Sriram, individual investor. Please go ahead.
Thank you for the opportunity. I just have one question. What would be the split between pipes and non-pipes? Like you have color-coated coils and crash barriers.
So 70% is tubes and pipes, and 30% is other products, which includes CR, color-coated, and engineering products.
Okay. Thank you so much, sir. All the best.
Thank you. A reminder to all the participants, you may press star and 1 to ask a question. Next question is from the line of Vaibhav Kapoor, individual investor. Please go ahead.
Sir, I mean, you all have about 41...
Vaibhav, sorry to interrupt you. You're sounding distant. Can you please speak through the handset?
Yeah, is it better now?
Yes.
Yeah. You all have about 41 lakh odd share warrants pending for conversion. Can you just give me the last date for the conversion of all these warrants?
So it is around September 2024.
Okay. So September 2024 will be the last date which seizes all these.
Yes, sir.
Okay. And second, just on your working capital days, could you give me the breakup of the 3 components for the working capital? The receipt.
Yeah, Arvindji will give you 1 minute. Actually, our inventory days is around 47 days.
Okay.
Our debtors, I'm telling you the numbers on 31st March 2023.
Okay.
So inventory is 47 days, debtors 28 days.
You don't have the current number handy.
I can tell you the H1 number. For H1 numbers,
actual number will also be fine. If you don't give the days also, that's fine.
For H1, our inventory is 32 days. Debtors is 39 days. Our creditors is 20 days. And overall working capital is around 50 days. So for this quarter also...
Will you repeat yourself, please? If you don't mind, I couldn't get all the 3 numbers.
It's similar for this quarter also.
Okay. So it's 32 days, 35 days, and
20 days.
23.
20 days for payables, creditors.
And is there any possibility to increase the creditor days, or that equation doesn't work out when you increase the credit period? Do you think you have to
actually on overall? This will happen with the volumes. As we have, greater volumes, and when we become good buyers of, in bulk. So definitely there is negotiation over there. So I'm expecting in next financial year, we should have a considerable improvement in net working capital days further.
So if you increase this right now, currently, if you negotiate for 40 days, it would not work out.
No. For 40 days, the steel mills, they generally, they work on an advance basis. But then, in some extraordinary in cases where the relationships are quite strong and there is, they are time tested. So in that event, there is some relaxation. It is not available to every company in the sector.
All right. That answers the question. Thank you so much, sir.
You're welcome, sir. Welcome.
Thank you very much. As there are no further questions, I now hand the conference over to the management for closing comments.
I would like to thank everyone on the call for taking out time for the discussion. Please feel free to connect for any other further queries. Thank you.
Thank you very much. On behalf of Antique Stock Broking Limited, that concludes this conference. Thank you for joining us. You may now disconnect your lines. Thank you.